Yeah, thank you for being here. For those of you who I don't know, I'm Mike DeCristofaro, the Director of Advisor Relations here at New Hampshire Charitable Foundation. In my role, I am focused on providing resources around charitable giving to advisors, such as yourselves, so you can feel better equipped to talk about the importance of philanthropy with clients, and that you can understand and discuss the ways that the foundation can be a resource to your clients in their charitable planning. So today is the first in a series of webinars we plan to present this year on topics that we hope will be informative and interesting, really aimed at bringing information to you, advisors, about how we work. Today, I'm joined by Michael Wilson, our Chief Investment and Financial Officer, who will share some insights about the Foundation's investment philosophy, how we're working to align invested assets with our purpose and values. We do plan to have time for Q&A at the end, so if you have questions during Michael's presentation, please feel free to drop them in the chat. We'll address them then. And if anybody has any sort of technical Zoom issues, also feel free to drop that in the chat or reach out to me by email. Yeah, so Michael, I think over to you. I know you have some slides, and I'm interested to hear about our investment philosophy.
Okay. Thank you, Mike. It's good to see you all. See some familiar faces and names on the screen. Thank you all for joining. So what I'd like to discuss with you today is one of the 4 primary tools New Hampshire Charitable Foundation uses to help make New Hampshire a more just, sustainable, and vibrant community where everyone can thrive. So the 4 primary tools are grants, scholarships, public policy, and investments. And so today we'll be talking about our approach to investments and how we're integrating the new strategy into that. So I'm going to share just a few slides, and give me a minute. Okay, Mike, can you see that okay? Okay, great. So at a high level, I want to talk about how we can use these invested assets. The foundation has roughly $1 billion in assets as of the end of last year. And I'm going to describe for you how we can use those as a tool to help advance the mission, share with you the investment approach we use, the options that are available to donors who work with the foundation, recent performance, and give you one example of what a sort of aligned investment looks like. And then, as Mike said, we'll turn it over to Q&A. So on the slide in front of you, describing here's the what's stated in our strategic plan around aligning the foundation's investments with our purpose and values. In the plan itself, we explicitly call on ourselves to bring an intentional, mission-aligned approach to all of our investments, as well as to expand our local place-based investing in the region through impact investing. And I'll come back to that to give you a couple of ideas of what that looks like. We intend to do this while still seeking to generate market rate financial returns for the majority of our assets, except for those where we intentionally sacrifice return for a higher impact. And to do this while also incorporating sustainable and impact investing criteria into our investment pools. This is a multi-year process. This is not going to happen overnight, or in fact, anytime soon. And we can talk about that in the Q&A, but it's an evolution of the foundation's longstanding practice of being an impact investor, but further integration of that into our approach. Slide. So we have some core investment tenets, as those of you who work in the investment advisory space perhaps have very similar ones. For the foundation's long-term portfolios, where we were managing assets across generations, the core tenets include maintaining an equity bias, with the belief that high returns of equities over time compared to other opportunities help us preserve purchasing power as well as grow principal and enable the spending that we need to generate to support the grant and scholarship work at the foundation. We focus first on asset classes and secondarily on managers, which you all know from your own work on the investment side. We seek to diversify the portfolios. So these, while individual managers may run concentrated portfolios, the portfolio as a whole is diversified so that we can seek returns by different factors and reduce the inherent volatility in a high equity allocation. This helps us hold our course when times become turbulent, as one manager strategy's deficit doesn't have a significant impact on the overall portfolio. And then we're looking for long-term horizons for the underlying investments, looking for at least 3 to 5 years in terms of the underlying strategy. We have a focus on value and contrarian investing. Doesn't mean we don't have growth managers, but valuation is a critical part of what we explore. And one way to manage the risk is rotating into inexpensive assets. We believe in disciplined implementation, and by that we mean focus on the process, not the outcomes. A line I generally use is good governance leads to good outcomes, and so we try to approach that as far as implementing our investment strategy. The thesis around gradualism is that there is still uncertainty around asset allocation. So even the most thoughtful estimates are unreliable. So we should avoid big heroic moves. So you won't see our portfolios particularly concentrated in any one space or theme. And then finally, the importance of rebalancing back to targets as valuations change is just an important risk control function that we implement. As I said, I imagine for many of you, these will be shared tenets, but just want to establish the way we think about managing the portfolios. And on the next slide, I want to share with you really the core investment options at the foundation. These numbers are as of 12/31/23. The long-term pool, which historically has really been focused on maintaining what we describe as intergenerational equity. So sustaining spending across generations, an area that we have not focused as much on sustainable and impact investing. In fact, it's really been incidental rather than strategic in terms of the approach. So with the long-term pool, with our new strategy, that will evolve over time. So as we look at managers, we try to understand what they bring from a sustainable and impact investing set of considerations. As we evaluate them, again, the focus there is on looking for managers who will seek to generate market rate of return. So we're not looking to concede return on these assets. The advisor managed pool, some of you on the call are trusted advisors in managing assets for this very flexible pool where donors can work with the foundation by recommending their investment advisor continue to manage the assets that they donate to New Hampshire Charitable Foundation. So the relationship becomes one between New Hampshire Charitable Foundation and the investment advisor. There's a $250,000 minimum to establish the fund. The funds do not necessarily have to be perpetual in nature. Donors have different time horizons, so we construct an asset allocation in conversation with the investment advisor and donor that best reflects what the donor's aspirations are around either grants or scholarships. So as I said, very flexible pool, and that has grown quite a lot over since its inception 9 years ago. The sustainable impact pool is a portfolio of investments that really reflects the full integration of sustainable and impact investing, so purpose and values aligned. This is in this pool, we hold some of our market rate New Hampshire investments that are seeking to have both an impact as well as generate a financial return. The foundation's been making investments of this sort since the early 1970s. We ended up having a portfolio that skews heavily towards affordable housing. not because that was a strategic choice, but that was an area where opportunities have arisen and there have been needs for the type of capital we can provide. But we've also invested in environmental related investments, economic development type of investments. So it's a real mix of investments since the early 70s, and we continue to express that through the Sustainable Impact Pool alongside global public equity and public fixed income investments. And the New Hampshire Impact Pool is intended to be high impact, but we're willing to concede return and looks for a 10-year plus horizon from donors who commit to this pool because the underlying investments seek patient capital. On here, you will see what is also available on our website. Every quarter, we update on our website the performance summary for the two pools. The long-term pool had a good year last year, did underperform relative to the policy benchmark, primarily driven by our 25% allocation to private investments. Those private investments, though, in the preceding years have been supportive of generating the kinds of return we seek in the portfolio. And since the portfolio's inception, or actually since we had, as far back as we had for the performance reporting data to June 30th of 1994, we've outperformed 70-30 by 0.5% annualized since that period. And then you can also see the data for the Sustainable Impact Pool, which did not suffer as much from the private investment allocation as there's an insignificant allocation to private investments in the portfolio. And before we turn it over to the group for Q&A, I wanted to give one example. This is 100 Nights, an emergency housing shelter that some of you may be familiar with in Keene. They were previously housed in a building in downtown Keene that really wasn't up to standard requirements. You had to go up a windy staircase to get up to the sleeping areas. Inadequate facilities for providing support for users of the facility around things like housing security, employment, and they also had taken over a hotel during the pandemic because of the increased demands on their resources, as well as brought in a bus that had beds in for men to sleep in. So this became a critical issue. They undertook a significant $7+ million project to build this 48-bed facility in Keene. Their ribbon cutting was held last year, but they had significant support from the local community, generous donors, but it was actually an $850,000 gap to close the deal. And we in the New Hampshire Community Loan Fund, alongside another investor, provided that gap financing. So we were paid on that loan to 100 Nights, paid interest on that loan, generated a market rate of return while having underlying impact in the community through that investment. We made the loan in the early part of last year and were paid off in full in the latter part of last year. So that's one example amongst many that we've made over the decades that we'll see expressed in our portfolios. The idea of sustainable and impact investing also includes sourcing managers on the public equity and fixed income side, as well as on private investments. And so this is something, as I mentioned, this will be an evolution for some of our portfolios. We look forward to working with donors who are interested in that, as well as investment and other professional advisors. We've seen a lot of interest from donors in this idea of sustainable and impact investing, and hope that will continue. So with that, I'm going to stop sharing my screen and we'll turn it over to the group and see what questions, thoughts, concerns you might have.
Well, hearing nothing else, I will certainly say thank you again for joining us. We hope that it was, just a interesting and a bit of information to be informative about our investment approach. And again, seeing many of you working in the investment world, understanding how we're focused on that, I think is and can be important to you and your clients. And so really grateful you could join us. If you have any additional questions about our investments or the foundation generally, or comments, thoughts, etc., I'm here to help. Please reach out at any time. And as well, I hope you will kind of keep your eyes out. We're going to have a variety of other events, as well as other webinars such as this throughout the year. So keep your eye out for additional opportunities from the foundation. And as always, look forward to staying connected.